So Graham, that is an excellent question. I'm looking very closely at the British pound or the Japanese yen trading pairs. And yes, I suspect we may have hit a huge resistance level, um, and could be at a huge turning point for these yen pairs. So I suspect it's going to take a little bit of time backing and filling here. We headed down to about the 148.5 level, trading about 149. We're trading between 148 and 152. So, I think it's just going to, tops always take time. So I do suspect we are at an inflection point. Hey, Peter, how you doing? Still waiting for some other people to join the room. Peter, is there anything else I need to do? Okay, so we have another question from Victor. Victor says, do you have any idea of how high the pound versus New Zealand dollar will go? Ference, how you doing? So the pound New Zealand dollar has been on my radar for a long time. I've been alerting our members to a huge buying opportunity in pound New Zealand. To my mind, this pair represented the best risk reward that I could see in a long time. It double bottomed at the 185 price level. And for the past several months, it's just been going sideways, but it's been going sideways in an ascending manner. And I said, look, this is a Dramamine trade. If you're going to watch it every day, if you're going to watch it on the 15-minute chart, you're going to miss the big move. And that's how the big moves happen. They don't happen when you're watching it. When you spend 6 hours a day till your eyes bleed watching something, and then it never moves, and then you throw in the towel, and then guess what? Yesterday, pound New Zealand dollar was up 300 pips. Went from 193.5 to 196.5. It's trading right around the 196.5 there. And I think we're going well over the 2 level. So I think there's 500 to 1,000 pips, on the table with pound New Zealand. So we've got Morrow, we've got Fish for Fun, we've got Jean, Peter, we've got Ference. So welcome. So tell me what's on your mind. Let me know if you have any questions about trading. I'm actively looking at all the markets right now: gold, Nasdaq, individual stocks. So for a few minutes every day, I'm here every day. If you want to ask any questions, hey Maria, how are you? So I like to make this an interactive thing, not just where I'm speaking. So let me know what's on your mind. Let me know what you're looking at trading. If you have any questions about, anything you're looking to trade. I trade everything based on price action and price patterns. That's it. I don't look at I don't filter out the news. I'm not watching Janet Yellen, in an economic conference right now answering questions. I don't care what she says. The market's going to do what it's going to do based on the prior patterns and price action. So for the past several weeks, I've been alerting our members to get short the stock of Zoom. The ticker symbol is ZM. And yesterday, the stock from out of nowhere went up about $15. And I just shorted it. To me, the stock long term is coming down. So whenever I see something like that, I think, it's just a gift. And so I shorted into Zoom above the 330 level. I was short Zoom coming into yesterday. I started shorting Zoom at 347 3 weeks ago. I added to my position yesterday, and today we're zooming lower. Stock's down $12 at 327. So Uche says, please give me your views on gold. So gold, I think, is also treading water, but I think it looks like it's ready to roll over and go lower and retest that 1,670 price level. So we've had 3 or 4 days now where you have this coil. What I refer to as an inside day bar coil, where each day's range is within the range of the prior day. And so for the last 5 trading sessions, the high and low of each one of the sessions has been within the range of 6 sessions ago. So The way I look at these inside bars or the coil is that it's a storing or suppression of energy. So you have this tight coil, and then it's just going to release. And we look at the patterns and the direction to see which way it's going to release. And to my mind, this thing's going to release lower. So I would put a sell stop on gold XAU USD around 1720. And if it goes higher, then you're never put in the market. And if it hits there, you probably got a $50 or $100 move after that. Someone wants to know about silver. So, silver has started to roll around too. It's been in this giant consolidation between 24 and 28, but it's starting to put on this head and shoulders pattern. It's starting to look what I call heavy. When I say heavy, it's like you've got all of this price action sitting on just a few support levels. So you've got all this monster, heavy price action that's been building. And so I think, silver is going to cough it up too and eventually go lower too. But I would short gold before I shorted silver. Farron says, what is your thoughts on the divergence between the Dow and the Nasdaq? So that's a very interesting question, Farron, because, starting about 3 weeks ago, we started to get what's called a rotation. So, the Nasdaq is filled with high-tech growth stocks, and the industrials are filled with, more staid, stocks like Caterpillar and Triple M. And so now that interest rates are going higher, the growth stocks are much more sensitive to higher interest rates than the industrial stocks. So the Dow has been much stronger. The Dow, continues to make new highs. Meantime, the Nasdaq's about 10% off its highs. So every day we see this rotation, out of one cyclical or one, area to the other. And that's what's going on. So this is, huge churning that's going on as, investors are, kind of legging out of these growth stocks and getting into more industrial type stocks like Caterpillar or Procter and Gamble or, more, very unsexy stocks. Calgary wants to know about the Australian dollar versus the US dollar. So, I think the dollar's in a huge trading range. I think the dollar is long-term weaker, but because of the higher interest rates, you have this flight to safety, this flight to quality. So now that US treasuries are yielding 1.6%, a lot of people are just, going to a flight to safety. There's no reason to take risk. And the dollar becomes a bit of a safe haven, at the same time. So you're seeing, a bit of this thing. And, right now, there's a lot of resistance up here in the Australian dollar, US dollar, but I suspect that it's just going to tread water for a long time. I don't think it's going to really come off, but I don't think it's really going to go up. So I think the dollar looks like, and these dollar, the dollar pairs, you can be locked in these ranges for weeks and months. And so, I've been short the euro versus the US dollar. I alerted our members to get short at 119.37. It's trading 118.27, and I think it goes back and retests that 116 level. So to me, the euro was, the currency that looked like it had most resistance at the time. It has a huge double top between 122 and 123. And based on the double top and the price action several weeks ago, I advised our members to be short. And, like I said, I sit in trades for days, weeks, and months. So I've been in this euro trade for several weeks now, which is very different than what most people are doing, where they're just hopping out, every 2 seconds based on some squiggle on the 15-minute chart. That's not what I do. I look for trades that, are setting up for big moves. I've been in Zoom for several weeks now. I started shorting Zoom at 347. It's trading at 325. I think Zoom, is going to trade $100 lower. So why would I get out now? I have $22 profit. I have 4,000 shares. I'm making $60,000. But $60,000 is great. It's very easy to want to just reach in there and snatch it. But, if this goes down to $100, I'll make $400,000. So that's what I look for in my trades. And if it takes a month, if it takes 6 months to get there, then, that's what it takes to make $400,000. Swim wants to know about crude oil. So crude oil, to my mind, hit a big resistance level at the 70. And so that's a huge distribution area. It goes back years, right around, above 65, between 65 and 70. So I think that crude oil just treads water in this area too. And so this is kind of what I try and do in my trading is I kind of find the instrument. I don't care what it is. I don't care if it's oil, silver, gold, the Nasdaq, an individual stock. What I'm looking for is a setup that's going to translate to a bigger move. And once I see things like the dollar or crude or silver trying to just go into these huge churning congestion areas, I just leave that. I wait for them to put a pattern or enough price action or enough time where I can see now a setup that it's going to translate to a move. That move can be over 1 day, 3 days, 3 weeks, 3 months. And so when I look at crude, it just feels like now it's just kind of locked in a very small, tight trading range between 55 and 65. And so for something like that, I'm watching it with one eye, but I'm moving on. And looking for the next Zoom or something that I can really tag. Wickham Wakamello says, "What do you think about euro versus New Zealand dollar?" So this is really broken out. I think, look, because I like pound versus New Zealand dollar so much, I think the euro versus New Zealand dollar, will follow. But to me, the cleaner trade is being in pound New Zealand. I can see the patterns. I can see the price action better. So I think we grabbed the bottom here. It looks like we've got a busted pattern forming in euro New Zealand. When I say a busted pattern, it looks like the market had looked like it put like a head and shoulders. And now with this huge price action higher, it looks like it's going to bust the implications. So this is what we do at the Pattern Trader. I observe all kinds of patterns, and it's taken me a long time to figure out that you see patterns all the time. And now you got to figure out which are what I call the governing patterns and which are kind of like a fake out pattern where it looks like something, but then it goes and does something else. And when market's looking like something and then it does something else, then to me, it just alerts me to get on the other side. Like euro New Zealand looked like it was going down, looked like it was in this bear market, this head and shoulders top. But by virtue of this huge, strong price action this week, it alerts me that it's going to go the other way. So it's like, it's not very sophisticated, but my thinking is if something's not going to go down, then it's going to go up. And sometimes it's just as simple as that. Rod says, "Do you have an emergency exit strategy?" That's only when I've eaten too much chili. Then, I've got to look for an emergency exit somewhere. No, look, I look at everything on risk and reward. And that's actually a good question, RD. I didn't mean to. I have been short this stock, IPGP. It's IG Photonics. I don't even know what the company does. I just look at price action. So I got all excited like 3 weeks ago when I saw a huge double top in this stock at, let me just pull this up. At about the $250 level. It's IPGP. It's got a huge M top. And then the thing dropped out, of the neckline. I thought it confirmed. And, I've kind of violated my discipline. I got so excited about the implications of what I thought this stock was going to go long term. And I still believe that I got in and I took a big position. I have a little under 7,000 shares. And this is a $200 stock. So that's $1.5 million position. And I've been short for 3 weeks at around the $204 level. And I've been watching it for 3 weeks go against me. It just went every day. It's been going against me. It went to $219. That means I was losing $15 on 7,000 shares, so about $120,000. And that never feels good. But frankly, and again, this is a bit of a violation, is that to me, when I see a pattern that governs or dictates, the price going forward, and maybe, I get a little bit, too locked into it. To me, until something breaks what I'm looking at, I didn't pull the ripcord. So even though this thing went from 204 to 219 on me, um, I didn't pull a ripcord. I stayed in, and yesterday it dropped and got me back to about a break even. And today it's up a few bucks. It's up about $1.80 at $206. I think my average cost is 204. So I've almost gotten back the $120,000 loss. But talk to me 2 weeks from now when this thing could be 180. So I didn't pull the ripcord. So for me, I don't make it's if you look at prices arbitrarily, or if you're looking at prices on a 15-minute chart, then you really don't know the cards you're holding. Because on 15 minutes, you could see one pattern, but it really doesn't mean anything. It means something for the next few hours. But if you look at something on the daily or the weekly, and I feel if I understand that pattern, then I'm able to stay with that trade. Now, if it kept, doing something and kept going against me at some point, it like Euro New Zealand, it would have like been a busted pattern where this thing's now not operating. But it kind of got to this, point at 219, had a little reversal, and it's been just trickling down every day, just a little bit. And then yesterday it got banged for about $8. And I'm looking at, almost a break even. Today I'll bet you this thing's going to be down again. So I've been short IPGP for 3 weeks. I'm still, not back to a break even, but, I believe in what I'm looking at. I think the stock will be $50 lower at some point, and I'll make a bunch of dough. So, I hope that answers that question. Collins wants to look at H&R Block. Sorry, I think I got the wrong HR. I got the wrong symbol. I think it's HRB. So I always, when I look at something, I look at a long time, at least 12 months. And even now, 12 months, I can't. It's at the high end of the 12-month range. So now I peel to the weekly. And yeah, this has been kind of consolidating. It looks like it has a bit of a double bottom. It's hit a long-term downtrend line. It's interesting. I mean, I would, buy it if it got above, this week's high. It looks like there's some resistance that's set in here. This has just been very sideways. And again, this is an example of something that, just gives me a headache to look at. It's like, I don't like to waste my time or my money. I want my money working for me. So I want to see something where there's a setup, that's going to translate to a move. Now, it looks like you could have a bottom in here. And, if it, like I said, if it took out this week's highs, which is, I guess, around $22, it'd be interesting. But I think that this just hit a resistance level, and, it doesn't really suit my fancy at the moment. So RD says, when do you move your stop loss to break even when your trade goes your way? So again, that's a very good question, RD, because, placing your stop loss and take profit, it's an art. It's not a science. So the first thing is, what I try and do is picture in my mind what, this pattern is. And because IPGP's got such a big double top, and I think that this will go down for a long time, long term, I wouldn't want to, suppress that opportunity. So I would keep my stop loss quite a ways away. It really depends where you are in a trade, what you're looking for in a trade, what that opportunity of that trade looks like. Sometimes, I might be in a Euro New Zealand or a Euro Yen trade. I was trying to trade the last up move in the Euro Yen, kind of knowing that there was huge resistance going to kick in around 130, 132. So when I was trading at 124, 125, I was looking for just 150, 200 pips because I didn't want to get hit with that, resistance. So it really depends where you are in your trade and what the potential you see for that trade. Like, for instance, Zoom. I think Zoom could go to $100. I'm not joking. We're trading at $325 now. I see the potential of that stock going to 100. So I'm short at 325. So, why would I put like a $2 stop loss on this trade that could cough up, 80, 100, $200 for me? So I was in this trade at 347, and yesterday it went back there. Zoom, when I got in at 347. It dropped to 316. So I was making $30 on 4,000 shares. I was making 120 grand, and then it went all the way back to where I got in yesterday. Went back to 347, but I didn't stop myself out. So you got to keep it, wide, because the market has a lot of noise, and now we're back to 326, and now I'm just going to sell some more. So I'll be short. I'm gonna actually, start shorting some more. I want to do the options in Zoom, but they're just too expensive. The put options, they're just too, you don't, get that great of leverage. So typically when I see a huge move like this, I'll also do the option, but they're just too expensive. So Andreas says, at what point do you add on your trade? So when the trades start confirming the direction I'm looking at. So, I look for a certain pattern, and then, I might look for what I call a key reversal in the direction, that I'm looking. So if I'm looking to get short, what I'll look for is a day where the market went higher and then closed at the low. And then the next day, if it kind of goes higher into that bar, I'll just short into that, using that high level as an insurance. I kind of think the Nasdaq is the same thing. Yesterday we came off, we had a little key reversal, and today we're kind of coming back a little bit, but I think that the Nasdaq will eventually drop off today. I'm hoping it does. I'm very short. Let's see. Ashwin says, hi Mark, I've been shorting silver since Monday and kind of going my way, thanks to you, but I want to know how far to set my take profit. So I think that this thing could really fall out of bed. People have been, talking up silver, $50 silver, this and that, but I think that this thing looks like it's really ready to cough up on the downside. And so your next big support in silver is right around $23.89. So about $1.50, from where we are now. There's, kind of a bar that's been holding things up. But if we get down to that price and take that out, then I think this thing's going to unload back to 22. And if it goes to 22, then it's going to go to 18. So I think this looks very heavy, and looks like prices are poised to go lower. Martini says, what's your opinion on the Dow? So, like I said earlier, there's been a huge rotation between Dow stocks and growth stocks. But, we had a reversal last week on the Dow. It made an all-time new high, close on the low of the week. So we're kind of just poking around these areas. I think it, may still take some time, but I think we're not too far away from a major top on all of these markets. S&P, Dow, and Nasdaq. And the first one to go will be the Nasdaq. So that's where my focus is. Jeet says, what do you think about Beyond Meat? That also looks like it's going to go lower. So I don't know how these indexes, are staying up, because all the stocks look like they're going to go lower. I think, I've been, an advocate of the short side of Beyond Meat for a long time. And it's starting to take out certain levels right now. It looks horrible. So there's a whole ledge, a long-term ledge in Beyond Meat at about $113. And I think it goes back there, and then, it looks good for $80 to me. So any other questions? Let's see. Gareth says, do you still think the QQQ will bottom at 310 to 312? Well, that's what's been happening. The QQQs have been ranging between, 310 and 325. Just been, going back and forth, batting, around both sides of these ranges. So today's close is going to be, really important. I think we're starting to round the corner again. We're starting to, create a little double top at that 325. And we started to, come off this morning. Now we're, going back up, but let's see how we finish. So today's close, so to me, it's very hot, important how something closes. As you can see in the middle of the day, the markets, just go back and forth and, drive you crazy. So what I try and do is, look at how something closes relative to the high and low. Well, Camilla says, do you ever trade exotic pairs like the South African Rand? I'm actually from South Africa. I may not sound like it. But no, I don't. Just because, I try and stay with the most liquid pairs because the spreads get very wide. This business is, difficult enough without having to fight your broker, without having to pay huge spreads, without having a liquidity problem. So, I tend to there's, so many things to trade. I don't need to, look for trouble. Let's see. David wants to know about Marvel. It's hard to tell. Hard to tell. It's a long-term uptrend. Sometimes, stock charts, they just get very nebulous. You have, you had a triple top at, or even a quadruple top at the 55 level. You fell off from there from 55 to 38. And sometimes when you see patterns and, you see a triple top and then it goes from 55 to 38, that pattern gives you, that move gives you exactly what the pattern was reflecting. And then the move's over and then it becomes something else. So there's a long-term trend line that I can see this trend line just visually on Marvel that is held up. And we're kind of, in the symmetrical triangle right now. And so I would look for a breakout, any kind of break above to like $49.50, to my mind would start indicating that this thing, maybe starting to break back up, in the direction of the trend. But anything below that symmetrical triangle around 45 may indicate, some kind of break below that. Daniel, I looked at WTI. I think it's in a trading range. It's got huge resistance right here at the $65 level. And, I'm just kind of not looking at that right now. RH. So, this is, something that I'm pretty pissed off. I have Restoration Hardware throughout my house. I love the company. I think they're the most efficient company and love what they do. In terms of the stock, we hit 540. We had this breakout, and it looks like it could be a bear trap up there, or a bull trap rather, because when you break above the level there, it was whatever, 520. There was a bunch of resistance, and then you just broke somewhat above there to 540, and now you're looking like you're breaking back into the thing. All those people who chase prices from 520 to 540 are, could get trapped. And whenever the market sets a trap, it can go the other way huge. So I'm actually glad you brought that up. I'm a big fan of Restoration Hardware. I love what they do, but there's a time and place for everything. And so there could be like a bull trap forming here. If you start, kind of trading back under, $500 here, $490, you could get a squeeze. Hey, Prashant, how are you? Ma, Daniel, how you doing? So I just answer a few questions every morning here, whatever you, want to talk about. Let me just see. So I think I answered, from our elite, again, we had an elite member, Victor, who said, how high will a pound New Zealand dollar go? So I've been telling our members for weeks now, ever since pound New Zealand bottomed at 185, It double bottomed. First off, it has a double bottom on the weekly, so I'm always looking for this thing to go higher. And then when I saw the daily bottom in December and January at 185, I said we're going to turn around. It's going to be slow, but we're going to turn around, and it was slow. I mean, it's just vacillated from January through March, just going crazy. But the vacillation, it's been higher highs and higher lows. But if you're looking at this on a 15-minute chart, no way you could trade that. No way you could catch this move. You would have been taken out, every single time. So this is why, I put on these trades and then I just sit in them. So I bought the British pound 193.37 on, let me just see where I bought that. March 17th. So 2 weeks ago. And since then, it's just been banging both sides of, 93, 92, 94, 92, just for 2 weeks. It's been doing nothing. I just held that trade, and I've been telling our members, this is a stealth bull market. You need to be in this thing, and when it breaks, it's going to break out hard. And yesterday, we went up 300 pips. And I think this is just the start. I think this thing's going up 1,000 pips from here. Someone says, what is your opinion about Covet stocks? So I don't trade anything on the news. Moderna, Pfizer, they've all kind of been doing nothing. Pfizer, offers a good dividend. So if you want to hang out for a dividend, but there's been kind of no performance on the stock at all. Moderna shot up, it shot down. It's kind of looking somewhat rangy and toppy right now. So, it's kind of the old saying, buy on rumor, sell on news. So obviously, the rumor, the R&D, the expectations of all of these stocks, doing something drove the stocks higher. And then when you actually see the result, when it actually comes out, then it's over. The market is an anticipatory thing. It's a discounting mechanism. So while the R&D was still, in the process, and we didn't know when we would have a discovery, all these stocks were, being bid up on the expectation. And then when, now we know we have something, then it's, buy on rumor, sell on news. So, those plays look like they're over. Axis is Nas looking to short again. So I am short the Nasdaq. I think we did have a reversal yesterday, and I think we're just, mucking around here. And I think we'll eventually go lower. Let me just take a look at what's going on here. I think this is kind of rounding the corner. It hit that 323, 319 yesterday on the QQQs. It keeps banging up against that resistance level. And now we're kind of rolling over. So today's close is going to be huge to me. If we close toward the low of the day, I think it's going to open up a huge move lower by the end of the week. I'm long a boatload of put options, QQQ, the 315s and the 312.5s. And so I'm short. I'm short Zoom. I'm short IPGP. So I'm pretty invested on the downside of Nasdaq. I think it's not a question of if, but when. So we could still be a week or two or a month away from a major top in these indexes, but I think we're close. The S&P is in this ascending, broadening price pattern. The Dow kind of broke out, but had a weekly reversal last week. So I think this is going to surprise a lot of people. I just, I listen to these broadcasts. You can see behind me, I've got the CNBC on, and I just listen to it for amusement. Everybody who comes on talks about the trillions of dollars that are being poured into this economy. And that we're going to have 7% GDP growth. And the thing is, it's just like the COVID thing. It's like, everybody knows that already. It's not like, this is, news. Once the stimulus package was passed, the 1.9 trillion, then we know what's coming. But the market now is looking beyond all of that. It's discounting. It's already factored in the stimulus. It's factored in a 7% GDP. It's factored into all these things. So it drives me crazy. I hear these guys and they get paid $1 million a year and they're talking about the now. The markets are about tomorrow and 6 months from now. They're looking forward, and now, with higher interest rates, decelerating cash flows for stocks like Zoom. So stocks are based on their future streams of income, certainly like Zoom. So Zoom has no earnings, right? So they're being valued on their future streams, that look out way into the future, 3 years, 5 years. And then you got to discount, you got to create a present value of those future streams. And so you use a discount rate, which is an interest rate. Now the interest rates are going higher and your cash flows are decelerating. And you've got this huge multiple. So now you're going to get this multiple compression. And I think Zoom is going to zoom, to $200. I actually think it's going to go to 100. Steven wants to know about Snap. My son was in Snap last week. He's in college. He goes, Dad, I bought Snap. I made 7%. I said, get out of that. And it's making a huge double top here, head and shoulders. It's sitting on this huge, it's actually pretty close to this Nasdaq has been held, Tesla, all these stocks are being held by this long uptrend line. And they all bounced off of it, when the Qs went to under 300, they bounced off that trend line. And now they're curling around. And they hit that trend line again. There's just going to be air under there. And, Snap is going to be snapped out of this. So I would be short Snap. So how do you determine the true value of a stock? There's no real answer for that. First off, I just look at price action. So I don't look at fundamentals. I'm not looking at earnings and discount rates and whatever. And it really depends, how you value a stock. If it's a industrial stock like Caterpillar, you look very closely at its PE, its multiples, its earnings. You look at a stock like Amazon. For 20 years, Amazon had no earnings. And the market just, kept on giving, the venture market just kept on giving Amazon money in the belief that one day it would monetize its base and produce those earnings. So at one point you couldn't value Amazon. There were no earnings. So that's a very different answer to but in the end, I try and make it very simple, something that a 6-year-old can understand. I just look at a picture. When I shorted IPGP, I put $1.5 million into that short. I watched it go $20 against me. I was losing 120 grand, and now I'm almost break even. So we'll see what happens. Just based on a picture, I have no clue what they're doing, what their earnings are, nor could I care. The market is looking out ahead and discounting what are those earnings worth into the future. All right, guys, I think I'm going to end it here. Great seeing you. Thanks for checking in. Hope you got some value out of this, and I'll see you next time.